Okay, so trading indicators, they lie, and here's why. Here's a chart of the euro against the Japanese yen, and this is a trade that I took on Friday, albeit not a very successful one. But here's my reasoning behind why I took the trade that I did. So on here, I've got three indicators. I've got the Bollinger Bands at the top here, the MACD, and finally at the bottom, the RSI. Now, this is a 10-minute chart, okay, of the euro Japanese yen. Now, here where the black arrow is, this is where I took my trade. It was approximately just after 10 in the morning on Friday, okay? And I actually went long, and you're thinking to yourself, why did I go long for? Surely I would be going short, because look at this trend here. Got this lovely downward trend on the 10-minute chart, mostly red candlesticks, and the price is actually below the middle Bollinger Band here, which is the 21 moving average. Okay, so it's coming down. So why am I going to go long? And if you look at the MACD too, the MACD, see all these red candlesticks here, that means the price is going down. The blue line has crossed the red line, which also means that the price is going down. So you're still thinking to yourself, why have I gone long? Well, I will tell you why. Because this blue line here is a blue line that I put in, and it's a support line. It's where I put my stop. Okay, it was support. It's no longer support now. But it's a very long time of support it's been. Because if we go to the monthly, okay, this is the monthly chart, okay, we can see that the euro against Japanese yen has actually been on an upward trend. Okay, so since about 2020, especially on the Bollinger Bands, you can see the price is above the 21, and it's been on this upward trend. And okay, remember, each of these candlesticks is a month, but this one here, the red one, okay, this is the current month, so it's recording at the moment how the current month is doing. So the monthly trend is up, okay, and as I said to you, the support last time that price was actually broken was a month ago. So look, we're all the way over here. This was on May 15th, or sorry, May 16th, shall we say, and on June 14th, this Friday, I took the trade out. So we're on a monthly uptrend. The price hasn't been broken for a month. See, it's come close, but it hasn't. So surely that would be support if we go back to the 10-minute chart. Okay, so surely this support here shouldn't be broken. But the thing I want to tell you about support is that support never lasts forever. Eventually the price will break through and support will come resistance. And it's the same with resistance. Eventually resistance will be broken through on the top side, and that becomes support. So the thing you need to realize, obviously, is that, you know, support isn't a permanent fixture. And another thing that I want to show you about these indicators is, okay, the MACD says the price is going down here, but at the bottom here we've got the RSI. Now when this line here hits the bottom on the RSI, that means it's been oversold. So if the price has been oversold, that means it should start going back up again, which, okay, the MACD says it starts going back up here, about here, but that's like a couple of hours later after I've already gone long. And even then it doesn't really amount to much. As you see, we've got new support along this level here. But what's happened is where I actually went long, you can see down here that it's actually oversold. Okay, so that's another factor. Okay, so we're looking at the fact it's been oversold. We're looking at the fact that the support level was there. So we're looking at the price reversing and going back up again, because there's a month's worth of support there. Also, another thing that I was looking at was client sentiment. You know, we know most traders lose money, and look, 73% of traders were actually short. So I'm going on the other side of that. So it's another indicator to say, well, look, the price is going to come back up again now. But of course it didn't. And it was only like, I don't know, about 20 minutes afterwards, a couple of candlesticks afterwards, it starts going down. And it goes down big time. And there was no news report, no economic reports come out for this big dip here. And we're looking at like just over 50 pips on that 10 minutes alone. And obviously then it hits the bandwidth and it starts to go back up again, but it doesn't really do much. It just sort of stays in this range. And obviously the MACD is now saying it's going back up and going back up. But at the time, the MACD and the RSI were contradicting itself. MACD was saying it was still on a sell. RSI is saying it's oversold. So, you can't 100% rely necessarily on indicators. Not all indicators are necessarily going to agree with each other. And even if all the indicators do agree with each other, it doesn't mean the market is going to do what your indicators are saying. The market will do its own thing. I was looking for probably about 30 pips on the other side, just a quick day trade, and I thought that was quite easily manageable. I don't normally trade the euro Japanese yen, and obviously all currency pairs have different characteristics. I normally trade the cable, the pound US and the euro US. They're the most popular ones to trade. Having said that, the euro Japanese yen is a major currency. It's a good pair to trade, but there's a lot of volatility. That 10 minutes alone you can get a big movement. Having said that, I thought my stop was adequate. My stop was also within risk management. We can't control the market. Even if all the indicators had said it's definitely a buy, the market at the end of the day will still do its own thing. We can't control that. The only thing we control is our risk management. And I didn't lose more than 2% on this. Okay, no one likes to lose on trade, but you're not going to get 100% winning system. Losing trades are just a part of this game. So you are going to get losing trades. But it just goes to show you between the 10-minute chart, the bigger picture, the monthly chart. There's all these different time frames that are telling you different things, and I used all of them just to give me some idea of where I thought the price was then going to go. At the end of the day, it really didn't do anything. It didn't really go short enough. It just stayed in this range, and maybe that's a fact of Friday trading. Maybe traders are closing it out, going home early, who knows. A lot of people don't trade on a Friday. I just happened to be free to available to trade. I wasn't working, so gave good opportunity for me to trade. And as I say, all the signs were there. The support was there. I thought it had reached its low. It was now going to hit back up off that support. The RSI said it had been oversold, so I thought it was obviously now going to reverse and go back up. The client sentiment as well. I was on the other side of a hugely amount of traders who were going short, and even if I'd gone short, I still wouldn't make anything. It sort of stagnated. So many indicators were in my favor, and obviously some weren't. And we have to trade based on the indicators and the probabilities. And obviously everybody reads a chart differently, and we all see different things within the chart. We always use different indicators. There's so many permutations. Obviously a zero-sum game. Someone wins, someone loses. And if we all had the same opinion, there wouldn't be a marketplace, because someone has to buy, someone has to sell. And there'll be traders, maybe even yourselves, who might have been on the other side of this trade who will have won. And that's just the nature of trading. Somebody wins, somebody loses, and we all try to get something out of the pie. And sometimes we win, sometimes we lose, but at the end of the day, we can use all the indicators in the world, all the fancy indicators in the world, all the AI, whatever, but the market will still do its own thing. And the market is like a living organism that just moves, and we do our best to try and predict what will happen, and that's all we can do. So we can only control the controllables, and that is the risk management, and keep our losses to a minimum, and make the most of our wins. So I've learned a lot of lessons today, and no matter how long you've been trading, you always learn new lessons. And okay, so hasn't been a very good week for me trading. Obviously I hate losing my final trade of the week, but these things happened. But I kept my risk management low, so I live to fight another day, and that another day will be next week. So yeah, bring on next week, and let's see what we can do then. Okay, see you later.